will bring a new honor to the United States. The U.S. will be home to the industrial world's highest corporate tax rate. Earlier in 2011, Japan's parliament is expected to approve a 5% cut in that country's corporate tax rate. That will leave the U.S. with the highest rate among OECD countries, 39.2%, if you factor in state tax rates. That dubious distinction adding new fuel to the debate here in D.C. over whether it's time to overhaul the corporate tax code next year. The U.S. Chamber of Commerce, one of the business groups lobbying for change. Caroline Harris is the Chamber's chief tax counsel. She joins me now here in Washington to talk about this. And first of all, thanks for the time. And the move in Japan leaves the U.S. alone at the top. It's a distinction nobody here in Washington wants. The question is what to do about it. Absolutely. We are number one, and we're not number one in a good way in terms of the fact that we now essentially have the highest tax rate. You guys said it, 39.2% when you factor in state issues. I think the issues that have caused Japan to drop their tax rate are absolutely issues we should be looking at. They have stagnant economic growth, they have a joblessness problem, and they're very concerned about the ability of their companies to compete. And those are absolutely three fundamental issues that we need to look at here in the United States. Certainly job creation, how to get the economy on the road to recovery, and how to keep our U.S. companies competitive. There's certainly a lot of people who look at this issue, and they've heard these complaints from the corporate community before, and they say the reality is the effective tax rate is not 39.2% for most U.S. companies. It's closer to about 26.5% once you factor in all those deductions and things like that. So corporate America is crying about an issue that's not really an issue. I think it really is an issue because you do have to use an extremely complex tax code. There are compliance costs to get down to that rate. That money could be more efficiently allocated to other things. I think that also at the end of the day, you just need to drop the corporate tax rate. You need to do something to keep us competitive with places like Japan or places like OECD, other OECD nations that have dropped their tax rate, that have undergone fundamental reform. UK and Japan also in the past couple of years transitioning away from a worldwide system of taxation, re-examining how they tax foreign source income. Also another very important consideration that we're going to have to make doing tax reform in the United States. It sounds like the deal on the table, and the president has indicated at least an openness to considering it, is lower the corporate tax rate but get rid of those deductions, those breaks, perhaps switch to a territorial system in terms of those overseas profits. Is that a deal that corporate America, that the chamber can live with? I think we've got to look at certain very fundamental issues. We do need to see a drop in the corporate tax rate. We need to see a base broadening. We need to see something that keeps competitiveness, stimulates economic growth, and gets job creation going. We also have to look at, the president has indicated that he is open to dropping the rate, as you say. What the president has been silent on, and which is so important, is what he would do with the international tax provisions. I think we found out this morning that the budget release, the 2012 Green Book, will be delayed until February. I think it's very important to keep a keen eye on what the international tax proposals are in there. In the past, he's proposed getting rid of deferral, foreign tax credits. Want to see if these are all things that mitigate those multinationals, try and bring some of those profits back. Exactly. And bringing the profits back is a huge issue. It's something Japan faced. Their incredibly high tax rate was prohibitive to companies bringing that money back. It's very similar in the United States. So dropping the corporate tax rate is absolutely something that would help ameliorate that. What about those people who suggest, listen, the real problem here is not so much government, but the business community. Those companies that do benefit from those deductions right now might benefit from some of the international tax rules or the manufacturing rules here. They stand to oppose whatever is happening here. Is there a unified message, if you will, from the corporate community? I think the corporate community is saying we understand if there is a corporate rate reduction, there's going to have to be trade-offs. There's going to have to be, winners and losers, and we're going to have to sit down at the table and make those considerations. I do think that, you drop the rate low enough that perhaps the business community would be willing to give up some of those benefits that currently exist in the tax code because they would be compensated on the rate side. So I think that if you're going to sit down and negotiate fundamental tax reform, everything has to be on the table. The President's Fiscal Commission, a bipartisan group, suggested this was the trade-off, lower tax rate for a reduction in those deductions. What's your level of confidence that this divided Congress and this White House could actually agree on something in 2011? I think we saw a certain level of bipartisanship in getting the 0103 impending tax hikes done. I think that was an indicator about how Congress will play out, whether we were going to see gridlock or actually a Congress that could get things done. I want to say I'm optimistic, but I do think that you have to come to certain fundamental agreements on major tax issues, major basic principles behind tax reform.
Washington needs to do that, and then they got to get down into the nitty-gritty and really agree on the specifics, and you know how that plays out in this town.
Really quickly,
Sure.
what about dividing corporate taxes versus the individual income tax issue, which has now basically been kicked to 2012?
Sure. I think you have to be careful. If you drop the corporate tax rate and you leave the individual rates at a high rate of 35%, you're penalizing people who operate in partnership or pass-through entity form. That's a lot of small businesses. You cannot preference big business over small business or vice versa. So absolutely an issue that has to be looked at and watched.
All right. We will watch it very closely in 2011. Caroline Harris with the U.S. Chamber of Commerce, thanks very much for joining us. Again, a very important issue here in D.C.